Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is July 21st, Thursday, July 21st. And yes, I'm a little flustered. I'm a little all over the place. I have so much to do this morning. So sorry if I'm a little scatterbrained. I had to bring you the National Association of Realtors deep dive. I brought that to you first. Now we will do the daily financial news. Then I'll speak to Jonathan, the three amigos. It's a wild, crazy day here at One Rental at a Time, but we do it for you. So let's get into it. First and foremost, remember, we are going to be doing a deep dive, a virtual mastermind, free for my students this Saturday at 9 a.m. If you want to be a part of this amazing group, if you want to be on this live and asking questions, you must buy the course. Sorry, rules of the road. But again, I understand that lots of you don't have $320. It's okay. The video will be live Sunday morning, 9 a.m. We are going to talk about the best financial decision. I have heard it from 100 of you, probably more than 100 of you. You have left comments on my videos about how house hacking changed your life. Some of you did it like Spencer and Todd, which is already loaded and available. 90 minutes asking about how to get roommates. Next, just 2 days away, we're going to talk about Matt and Dion, how house hacking units set these folks up. A ninth grade dropout, a single parent of 2 kids, and $89,000 in debt, making $17 an hour, changed their lives. You heard from Anna Kelly just yesterday how she house hacked a fourplex with 2 kids upstairs in the snow. Kind of reminds me of walking uphill both ways, but it's true. You heard the story. She talked about it. Best financial decision ever. And the one regret I have is I didn't house hack it 20 years old. I would have been a millionaire by 30. Instead, I started real estate investing in 30. House hacking is the way to go for lots of us. So Saturday morning. All right, let's talk about earnings. Tesla. What do you got to say about Tesla? First off, they blew away earnings per share, right? They beat by like 47 cents or something of that nature. They were a touch light on revenue. When I say top line and bottom line, here's the deal, simply said. Revenue. Revenue is how many cars did Tesla sell times an average price. There's a little bit more in that because they do solar and service, but you get the idea. How much stuff did we sell? And bottom line is how much money did we make? Revenue minus all your expenses, right? Employees, rent, lease, parts, work in process, earnings. So some of you ask, what the heck does top and bottom line mean? Simply said, top line, how much we sell. Bottom line, how much did we make? Other interesting things about Tesla. First, Elon Musk sold 75% of his Bitcoin. I thought I remembered that he wasn't ever going to do that. Turns out Tesla wanted to raise their cash position. Remember, Elon told us these big new factories are money furnaces. So I believe his CFO and likely treasurer said, hey, Elon, we want to make our cash position a little bit better. So they sold 75% of their Bitcoin. I found it interesting that they sold 0 of their Dogecoin. I think that's actually telling. That means Bitcoin has value, Dogecoin doesn't. That's just one guy's opinion. Also, something to watch. If you are a Tesla bull, you must be aware of this. Their margins on cars, like what they're supposed to be building, is shrinking. There we go. Cool. So again, we need to watch that. But again, all in all, I have no skin in the game. Lots of people are buying Tesla cars. Next up, United Airlines. Lots of earnings to talk about. United Airlines, first profitable quarter since the pandemic. They're not losing money anymore. That's good. They did miss top line, miss bottom line. Their costs are all over the place. Fuel costs, labor costs. It's no fun running an airline, but hey, they made some money this quarter. Abbott Labs, good time to be in pharmaceuticals. Beat top, beat bottom, and raised full year guidance. Next up, AT&T, beat top, beat bottom, but lowered full year guidance. Why? Currency. Cash flow guidance is going down. DR Horton, home builder, missed revenue, beat earnings, lowered guidance. Not good, folks. What do you expect? What have we been talking about? Home builders are going to discount what they have ready, and they are going to slow down. Home builders are just like Target and Walmart. Just like them. What happened? Oh my God, we have too much inventory. Oh my God, let's discount it, but let's stop ordering. DR Horton is just like Walmart, just like Target. Cash flow management, slow down, lay off, same stuff. And then finally, Carnival Cruise. Carnival Cruise Line is going to issue $1 billion in new stock. Folks, if you look at Carnival, I think they've been flagged a couple of times as one of these zombie companies. Well, they're going to issue $1 billion in common shares. That's going to be hugely delusional. And then finally, Domino's Pizza. Domino's Pizza was one of those pandemic darlings because we were all ordering pizza. They beat on revenue, but missed on earnings or the bottom line. They actually have currency hit. I didn't even know Domino's. I guess I've seen Domino's around the world now that I think about it. But yes, currency hit. Raising costs, cheese, dough, and shortage of delivery drivers. So lots of pain with earnings and lowering guidance. Mark Zandi, chief economist. He had a very interesting report, and this is what I had thought was happening. Remember, National Association of Realtors report yesterday, negativity starts growing. Mark Zandi, you are up first. The housing market is entering a deep freeze. I actually agree. I think he's absolutely right. What is a housing market in a deep freeze? Less transactions. Buyers and sellers can't agree. We've lost the buyers, the FOMO. I think the housing market is going into a deep freeze. Why? Because the Fed broke housing. And again, other things that Mark Zandi highlighted that I have brought to you for months. One, we are seeing a lot fewer home sales on the low end. We are actually seeing more homes sold on the high end. I actually brought that to you as the most important variable in my deep dive that I just completed. That is why I confidently said the median price would go up. Because again, we lost 31% of the low end. The high end grew 1%. It's just how the number is calculated. I don't know if you saw this. This might be fake news. This might be propaganda, but I got this sent to me by several of you. And I think I put this on Twitter yesterday. It might have been Instagram, but I think it was Twitter. It looked like, remember that bank in China that was getting overrun? They had protests. Well, there's a recent 12-second video. They have now tanks in front of a bank to prevent bank runs. That's one way to stop a bank run. Heavy artillery. Kind of overkill, don't you think? But hey, it's China. What can you do? ECB, Europe, they raised rates. They went from negative. They've been negative for 5 years. They are now at zero. They raised rates by 0.5 point. And then finally, the Fed. What's going on with the Fed? Are they going to do 75 next week? I think 75 is a lock. I do not think they're going to go 100. I think they've seen enough negative information, home builders, their sentiment, existing home sales. I think they're going to look at this and go, hey, we don't have to do 100. We'll do 75. And then finally, John Burns Real Estate Consulting. If you guys aren't following John Burns on Twitter, you are making a mistake. John Burns actually put out a chart on Twitter yesterday, it might have been the day before. Single family rentals, the stuff that you and I focus on, have actually declined over the last 7 years, both in raw unit count and as a percentage. I found that fascinating. You and I have undoubtedly heard about Wall Street dominating single family rentals. Well, they make up less than 1%. But when you add all single family rentals, we are actually going down 7 years in a row. Supply and demand. That is one of the reasons that I think single family rentals will have firmer rent prices. And I still think apartments are going down. I think there's too many. I think rents exploded too much. People can't pay. Not healthy. So folks, I'm sorry. Today, the 21st, the Thursday, been all over the place. I tried to get 2 live streams done before my interview with Jonathan. Hopefully it was okay. I know it was a little chaotic, not my normal scheduled time. We'll be back at it tomorrow at 7:30. Take care of yourself. Have a wonderful day. Bye-bye.